Hello, Mambo VP YouTube family. Today we're on part 2 on the cause of the most profitable technical analysis tool, and which happens to be my favorite. This is the Fibonacci tool. On today's video, we will be combining the Fibonacci retracement tool with support and resistance levels to see how efficient this strategy is. If you missed part 1, where we introduce you to the Fibonacci retracement tool, I'll leave a link in the description. Go watch it. Before we dive deep into the topic, first, I would like to thank you for viewing this video. And if you're interested in content about the financial markets or Forex in general, well, this is the place to be. All you have to do is click subscribe, like the video, and click the bell icon so as to not miss even a single day's worth of content. Let's get into it. Trading the Fibonacci retracement with support and resistance is my favorite strategy and one very profitable way of trading. As you know, prices always tend to bounce off support and resistance levels. So if our support or resistance levels are aligned with our Fibonacci retracement levels, we should expect that if prices do bounce off that level, we will have very profitable potential targets. Okay, as you can see, prices form a very beautiful uptrend right here, and we can see a reversal. So the first thing that I would note is that if prices do break this high, then they might keep going down. Okay, so for me to get the next potential target where prices might bounce off from, because this is the resistance zone that has the strongest probability that prices will bounce off from. So what will I do? I get my Fibonacci tool. Okay, remember, this is my Fibonacci retracement tool. You go click on your Fibonacci retracement tool, go to the lowest point the market reached and push it up to the highest point the market reached, and say it's there. Okay, so basically we know that prices, if prices break this high, then high probability that the prices will break this next high and will go bounce off from this support level. And that's exactly what prices did. So they came to this support level, and what happened? They started bouncing off. So what would I do as a trader when you see this? Okay, so let's have a replay of what might happen, what happened here. Okay, as you can see, prices come and bounce off this support level and start pushing back up. So when we see that prices have started pushing back up, what would you do? So basically, I would make my entry right there, and I would have 3 take profits. This would be my first take profit, this would be my second take profit, and this would be my third take profit, and this would be my stop loss. So in fact, my stop loss wouldn't even be that high, it would be somewhere around here. This would be my stop loss. Okay, somewhere just below this support and resistance level, but in a place that won't affect my liquidity. So let's just say somewhere around there. So this would be my support level. So what would I do? If I make my entry, then let's see what happens. Prices almost come and retest this zone and keep going up, right? You can see prices keep going up. So my first take profit has been hit. My first take profit has been hit. So what next? What I would do is I would take my stop loss and I would put a break even. I would remove my stop loss, I would put a break even. So right now I'll be securing all my profits in. What next? Let's see how price kept moving. We can see prices came and retested this area and went back down to retest this higher high. Okay, we can just see a similar pattern forming. This pattern that we see that wants to form is this pattern that is here. Okay, so we shouldn't be scared because we have this higher high that is here. So prices will bounce off this resistance zone and might keep going up. So let's see. This becomes the new support. Okay, so prices are bouncing off now a retracement zone. Okay, and our second take profit has been hit. Okay, our second take profit will be hit. So after we see that our second take profit is hit, in my mind I know that now stop loss will move from entry. In my mind I just know that this is my new stop loss. Okay, so prices keep moving. I'll be monitoring, making sure that if prices do start coming down, this is the last zone. This is now my new stop loss. Okay, so let's wait and see what happens. We can see prices clearly bounced off this higher high and went back down to this support level right here, which is also a higher high. And let's see what happens. The trade is still running. Okay, and prices have come and bounced off this place, so high probability it will come here and it might even bounce off it again and come and retry this area. So if it does bounce off this area, wait for it to come here, make your entry, and this is your take profit. This below, right below this, somewhere around here, is where your stop loss should be. Let me show you. Okay, this is an active trade. Let me show you what exactly I'm talking about. Now if you had to make your new entry, I would suggest you put your stop loss there and your entry level right here. This will be your take profit at this support level. That will be your first take profit. So if prices do break this support level, you will then move your stop loss to entry to secure all your profits in, and wait to see if prices do push up to our last take profit. Okay, so if you viewed this video till the end, I would like to thank you. I would also appreciate it if you click subscribe, like the video, and share the video for more content like this. Our videos will be dropping on Monday, Wednesday, Friday, and Saturday at 8 p.m. Stay tuned. As a trader, you should always understand we work with probabilities and possibilities of the markets moving in the direction we expect it to move. So basically, we need to collect more and more data in order for us to make wise and conscious decisions if we want to remain consistently profitable traders. This is literally the main reason that I do not trade with confirmation. This is literally the main reason that I do not trade with confirmation from just one technical analysis tool or indicator. I prefer to combine strategies in order to get a clearer picture of where smart money is pushing the markets. I'm certain you've heard millions of times, if you follow smart money, you will make money. Okay, so let's take a look at this example.